Happy Chinese New Year, and how crypto will remember the last one. Happy Chinese New Year, and how crypto will remember the last one. Since the inception of Bitcoin less than 10 years ago, there has undoubtedly not been a busier year than 2017, the year of the rooster, for the whole cryptocurrency market. Now, as Chinese New Year dawned, the year of the dog, it is worth looking back at all that happened. It all began relatively inconclusively back in January 2017, with Bitcoin breaking the $1,000 mark. But from there, the cryptocurrency market would make its mark both in the mainstream and in the global markets. A gradual climb. 2017 welcomed Bitcoin well at the top of the table, sitting just above the $1,000 mark. The year started slowly for cryptocurrency as the likes of Bitcoin, Litecoin, and Ethereum, some of the heavy hitter in terms of market cap, all slide sideways. Gentle rumbling in the second quarter. It wasn't until the second quarter of the year when things started to heat up, with volatility sending price rocketing skyward. This rapid increase piqued the public interest, and more news about crypto started to reach the mainstream. Toward the end of May, Bitcoin price had doubled, while Litecoin had gone from $3 to $25 in the same space of time. Ethereum was also up over 1,400%. A boom in ICOs. This increase in market growth of cryptocurrency saw a large spawn of ICOs and new coins entering the market. In April, the ICO market rose from $6,000 to $115 million as companies jumped on this new form of funding. The frenzy of ICOs and the interest generated from them in terms of new investors saw the cryptocurrency market gathered broad mainstream appeal for the first time. New investors entered the water, driving up the price of most of the larger, more established coins, while also setting more and more record for the ICOs. The end of a civil war. Bitcoin and its larger companion needed to grow and gather more support and interest from all and sundry. However, beneath the surface, there was a civil war brewing, reaching a crescendo as the Bitcoin network struggled to scale with the influx of new users. Suggestions were put forward from a divided community from either a hard fork or a user activated soft fork. This divide of opinions caused disarray in the Bitcoin market as different factions fought tooth and nail to have their way. However, while the market took a deep leading up to the August 1st deadline, the outcome was far better than expected for both Bitcoin and its newly formed alternative, Bitcoin Cash. The fork happened, as did the initiation of the SegWit, but by the end of the war, the market reacted positively. A new wave of interest. With the end of infighting at Bitcoin came a fresh wave of interest, one that was born of Wall Street money. Those who had shunned Bitcoin as too volatile before began entering the market. The interest and opinion of Wall Street types saw Bitcoin become more prevalent in mainstream media sources, and as interest grew, so did the price. Unwanted interest. However, Bitcoin and other cryptocurrency were still predominantly being viewed as tools of the dark web and hackers, and with regulators far behind the 8 balls and skeptical of the decentralized money system, there was a harsh crackdown to come. China started things with a blank ban on ICOs, which had reached their own fever pitch, then went a step further by banning the exchange. Russia soon followed suit, but by this time the market had dipped and regained its momentum after the regulatory crackdown in China. In fact, the market barely budged at the news of Russia banning access to Bitcoin exchange. Monster rally. It became evident that Bitcoin and other cryptocurrency were getting too big to be broken, and as negative news failed to flutter the digital currencies, interest returned and price soared. Bitcoin cracked $10,000 late in November and then went on to smash through $1,000 barrier with ease, all the way to touching $20,000 in a monster 18 days rally. A big correction and the boom of altcoins. The rally was put down to the lead up of the introduction of features to crypto markets. These investment tools of Wall Street legitimized the digital currency further and also helped individuals join the rush to get involved in cryptocurrency. The brief stop at $20,000 indicated a top for Bitcoin as it plummeted back down to $13,000, struggling to reach similar height as the year drew to a close. However, there was a late rally that saw a number of altcoins have their days in the sun, including Bitcoin Cash, Ripple, and Ethereum. The New Year bubble. The correction continued for Bitcoin and other altcoins as the market started to plummet through January. Many speculated that it was due to the Chinese New Year celebration that were upcoming, drawing comparison to similar stats in years gone by at this time. However, as Bitcoin crossed below $10,000, shedding half its value, mainstream media speculation and reporting started to drive the price even further down. There was a lot of FUD about going on in South Korea, which turned out to be false alarm regarding a potential ban. Similarly, in India, there was mainstream misinterpretation of a budget speech. The Bitcoin price fell as low as $6,200 as many proclaimed the death of Bitcoin for the uptenth time. However, Bitcoin is back at $10,000 and keep climbing as the Chinese New Year approach.